Hey guys, welcome back to another episode of T2 SMC Trader. So learning has no limit, and when you will watch this video, you will learn a lot from this video, but you have to make sure that you are not watching this video as Netflix, okay? So you have to take some notes from here so that you can use this information in your future. Before going to this video, make sure that you have given me the thumbs up, and if you are new, don't forget to subscribe to my channel. This is Friday's price action. I would love to explain this price action. This high is the Thursday high and this low is the Monday low. So Monday to Thursday and today is Friday. You had the range, weekly range. Here to here, you had this weekly range. When price was above this high, I expected that market should come back again into this range. At the same time, if you take a clear look, you had this relatively equal lows over there and relatively equal lows over here. So you had these two sell side liquidity from hourly chart for Nasdaq. You had this all-time high over there, except this all-time high, you don't have any other liquidity above the market. If you look at this fair value gap, this is the entry fair value gap from hourly chart. I have marked that entry fair value gap from hourly chart because when I'll be in 15-minute chart, you will see that this leg is not so clean, so messy from 15-minute chart. And above this hourly entry fair value gap, this is the hourly last fair value gap. As market didn't reach until that last fair value gap over there, I don't need to talk about that one. This entry fair value gap is enough for holding the price and sending it back for the lower for the sell side liquidity. Two type of things here is working all together. First, today is Friday, so market should reset the price. That means it has to come back again into the weekly range. The weekly range is Thursday high or low and Monday high or low. In this type of in this case, I have to mark the Thursday high and the Monday low. Vice versa, sometimes it can be Thursday low and the Monday high. Okay, it can happen like that way as well. When market above this high, I also don't have any buy side liquidity. So market has taken all the buy side liquidity. After taking all of this buy side liquidity, where should market reverse? Toward the sell side liquidity. So market should come back again into the weekly range, as well as I have the sell side liquidity. So my bias is bearish. I would love to look for only sell setup today. Now I'm going to 15-minute chart. There is my 15-minute chart and this is that specific leg, and if you take a closer look over here, you will see a very messy price action, no clear fair value gap or nothing over there. That is why I marked the hourly entry fair value gap and the last fair value gap. Okay, now around 8:30 we had a news, and you can see around 8:30 market has taken all the buy side liquidity around the news. Then market went lower. I was expecting that market will go for this sell side liquidity from any of these fair value gap. Either this fair value gap, there is a very small fair value gap, or from that fair value gap. So my expectation was market will fall from any of these fair value gap. Where it is going to fall? Toward that sell side liquidity from hourly chart. Now at the same time, I had this new day opening gap around that sell side area. So it can be little difficult to see the sell side liquidity, but I have already shown you that we had this sell side liquidity, and from 15-minute chart we had this obvious sell side liquidity. Okay, I also talked about this sell side liquidity from in my live, that market after taking this one, market can take that one. But today I'm not expecting that market is going to take this sell side liquidity. So until this new day opening gap high, I'm bearish. And if market can break this new day opening gap high, and if we have the time to trade, maybe it will go toward that sell side liquidity. I would love to show you something else. You know that market tap to this hourly entry fair value gap, then market fall, take this sell side liquidity and that sell side liquidity. Finally, where market reach exactly. Now, if you take a very nice, perfect look to that run, where do you see the last fair value gap? I'm going to mark the last fair value gap from 15-minute chart now. Okay, so here, this is the last fair value gap from 15-minute chart. There is no other fair value gap below this last fair value gap. I have already talked about a lot of times about the last fair value gap and the entry fair value gap. You guys don't give that much attention about that. That's why you don't see the perfection. Here, where market reached and where market reached exactly to that last fair value gap from 15 minute chart. You should not have any confusion about that, because below this last fair value gap, I have next last fair value gap around that area. But to that specific leg, this is the last fair value gap. Below this last fair value gap, you have this sell side liquidity. This low, maybe that low, they're not relatively equal lows, but this swing low is the obvious liquidity or some kind of liquidity below that low, though I don't mark single low as my liquidity. But above this single low, I have this last fair value gap where market tapped to the high of this last fair value gap once, then market went higher. When market came back again, it has closed this fair value gap perfectly by wick, not by body. Okay. When market, I was expecting that market is going to fall from this fair value gap. Market keep going higher, keep going higher. As I have told you that today is Friday, so market should come back again into this range, this weekly high and the weekly low, into that range. When market is going higher, I'm not getting panic. This is the part where you should have been understand the price action. You should not get panic when market is going higher, because you know market is eventually market is going to fall. In my life, I told that who have the courage to take the sell or frame the sell setup from that area after seeing that big run. This is me. I'm the wizard of this market. Start believing me. Sorry. Just believe me, whatever I'm telling you, it's logical. So when I'm saying something logical, you should have listened to me. Okay. I'm going step by step into the deeper price action so that you can understand the whole price action. I will explain why you should not use some fair value gap and why you should use some fair value gap, how you should use time and price theory. Okay. So market went higher and finally it tapped to this entry fair value gap from hourly chart. I wanted to see that market will reach until that constant crossman, but it didn't do that. Instead of that, it just tapped to this entry fair value gap from the hourly chart, then it fall. I'm now going to 1 minute chart. When I'm in 1 minute chart, you can see after reaching over there, market has made a swing low, which is valid for shifting market structure. Now, if you ask me, this low, is that swing low for shifting market structure? No, it's not a swing low. It's the relatively equal lows, exact equal lows. It can't be your swing low for shifting market structure. So you won't see this as your market structure shift. Either way, you have no parallel gap around that area. So this is not a valid market structure shift. Instead of that, market went little lower and made another low, which is valid for shifting market structure. This low is valid for shifting market structure. After shifting the market, this is your entry fair value gap, this is your last fair value gap or the breakaway gap. Price tap to this entry fair value gap, market fall dramatically. In my life, I told that you can frame a sell setup from there. You should take a partial to that specific last fair value gap, to that 1 minute run, and you can hold your trade until this high, this blue line. What is that blue line? Thursday high. Remember the weekly high? That was that blue line. So you can hold your trade until that area. If you frame that trade from there, that should be your entry. Your stop loss is going to cover the breakaway gap, constant encroachment at least, and until that line. Okay, it's near about 94 handle. Risk to reward ratio is near about 1:5. 1:4, I'm sorry. So that was the setup. Now I would love to explain this buy. Okay, when market was going higher, you can think that after taking this sell side liquidity, that was the market structure shift, perfect fair value gap trade. This is the entry fair value gap, this is the breakaway gap. Market tapped to this entry fair value gap, then market started to go higher, and finally market reached until that area. You should not participate into that run, because by opening your chart at the beginning of the session, you knew that market should stay inside this range and market should go for this sell side liquidity, this to sell side liquidity, because you don't have any buy side liquidity. That is the reason you should not look for the buy. You have to let it go. You are not paying attention to that specific area. That's why it's gonna be difficult for you to trade. Trust me, brother. This run you should avoid. Then instead of that run, you should look for the sell setup only, because you know market is coming back into that weekly range. Okay, so after that market came here into this weekly range, I framed another sell setup over there. Now I'm going to explain this sell setup with little higher time frame price action. Okay, now I'm going back again to the 15-minute chart. Now you can see that when market reached until that area, then market fall. I was talking about the sell setup around that area. Okay, now what do you see in that area? Do I have any bearish fair value gap over there? No, I don't have. I have a bearish fair value gap or the entry fair value gap around that area here. This is the entry fair value gap from 15-minute chart, and this is the last fair value gap from 15-minute chart. That means you should wait until that fair value gap to frame your sell setup. I told in my life that I don't want to see market is going to trade that entry fair value gap. Instead of that, I would love to see it will work as a breakaway gap. Instead of that, I would love to use this BPR, that BPR to frame my setup. That means it should reject from the constant encroachment of that BPR. Why did I tell you that? There is the fact of time. First time, then price. What is today? Today is Friday. That means Friday market should stay into the range, weekly range. It has went above that weekly range too far. It went too far already, right? Above this high. That was the high from Thursday. Market went too far above that high. It has done its job over there. This is called the manipulation. Over here, this whole run has done all the things it has to do. That means now it doesn't need to go higher again. Now this entry fair value gap too far or too high from that weekly high. Weekly high means Thursday high. So it is too high above that weekly high, previous Thursday high. That is the reason I don't want to see that market will work again above this weekly high. I don't want to see that. Today's Friday, market should reach for the sell side liquidity. It went too far above that high. It doesn't need to go back again for that fair value gap. It should not work with that fair value gap. Instead of that, it should work with this BPR. Now, if you don't understand this BPR, no need to mark that one. Instead of that, you should think that this is your real fair value gap, where at the beginning you thought that market is going to reverse from there. Why you did think like that way? Because that high has taken all the liquidity. All the liquidity has taken by that run, specific that run. Then market went fall dramatically. This was your market structure shift. This is your breakaway gap. There should be your entry fair value gap. That means market can use this fair value gap now for framing the sell setup. This whole run actually was the manipulation to make sure that whoever in this market was taking sell, they are all stopped out. So all of them has been stopped out. You should not think that market is going above that fair value gap one more time. Okay, so this fair value gap. That means I would love to see avoid the run from here. Here market went higher and market come back again here. This to run, just forget about that. There is nothing like this. There is no fair value gap. There is nothing at all. At least not for today. So this fair value gap from the main or from the beginning, this is the important fair value gap, and you can see market tap to this constant encroachment of that fair value gap or the breakaway gap, then market fall dramatically. This is how you should understand that sometimes you can avoid this fair value gap. This is why time is important. What time is today? Today is Friday. So this time or the knowledge about the day is important. You will use that knowledge with your weekly range. When you see that market is already went too far above the weekly range, you don't need to expect that market is going again above for trading some kind of fair value gap. You can expect that on if you see that market has taken all the sell side liquidity. All the sell side liquidity has taken. Then you can think that market is going higher one more time. For example, when you saw this fall, maybe that fall has taken all the liquidity. There is no liquidity left. Sell side liquidity is left. Then you can think that market is going higher one more time, and it is actually spending its time around that area. When you had the sell side liquidity, very clean sell side liquidity, you should not think that market is coming over there one more time, because market is in rush to reach some specific level. Now here, this is the last fair value gap. Just above this last liquidity, okay, above this liquidity, this is the last fair value gap. I told that when market will come here to this last fair value gap, make sure that you also be careful, because it will give you the reaction from that last fair value gap. It will give you the reaction, so make sure that you are not chopped up with that reaction. After getting the reaction, make sure that you are extremely bearish until this new day opening gap high. I'm going 1 minute chart one more time. I believe that you understand the part where I explained this price action, why market is not going toward that entry fair value gap from 15 minute chart. And you can see around that area, market has taken all the buy side liquidity. That was the market structure sheet. There was the fair value gap. If you take the edge to that fair value gap, put your stop loss above that high, then you can target this fair value gap high, or maybe this low, wherever you want to make your target. You can make your target anywhere you want, but here this is your entry. Your stop loss is above that high, and your target can be this one, okay, this 15 minute fair value gap high. Brother, you told us not to target the extreme liquidity. My extreme liquidity is here, at least here. This is my extreme liquidity. I'm not going to target that one. I know market is going to take that sell side liquidity, but before taking that sell side liquidity, I have this break or this strong resistance over there, so I can just target over here. If you are not interested to target until that area, no worries, you can take some partial below this relatively equal lows. See this relatively equal lows or obvious liquidity, and then you can put your stop loss to the break even. You can let the rest contract go until it wants to go. You can see this is 86 handle, and your risk to reward ratio is 1:3.4. So make sure that you understand this part perfectly, the way I explained why market is not going until that area. Instead of that, market is working around here with this real fair value gap. Then market fall again, and it tapped to this fair value gap, and you have seen the reaction. This was the reaction. So this reaction sent the price until that area. Okay, over here, what do I have? So now let me go to 15 minute chart one more time. So when market reached until this fair value gap, last fair value gap around that area, just above this sell side liquidity, this fair value gap, price came here around the lunch hour. Then market went higher again. Here, when market fall, what do you see over there? First, I would love to see, I would love to mark the order block. See this low, this is the perfect order block. Okay, let me mark this order block. Why this is the order block? Because it has been traded that inversion fair value gap. It doesn't need to trade that fair value gap. It has traded that inversion fair value gap. It's a typical order block. If you are confused about that order block, don't get panic. You don't need to mark that order block. Instead of that, you can see this is the fair value gap, bearish fair value gap from 15 minute chart. So I would love to mark that bearish fair value gap from 15 minute chart. What else do you see? High, low, higher high. See this down close, body close candle. This is going to be your breaker block from 15 minute chart. From 15 minute chart, this is your breaker block. So let me mark this breaker block. Let me remove this order block from that line. This is your 15 minute bearish fair value gap. Keep that in your mind. This is breaker block. This is 15 minute bearish fair value gap. Now I'm going to 1 minute chart one more time. Now I am in my 1 minute chart one more time. Why? What I'm looking for? Am I looking for buy? No, I'm not looking for buy. Why I'm not looking for buy? The reason is I have this sell side liquidity still untaken. That means market didn't take that sell side liquidity yet. I need to see that market has taken this, at least this sell side liquidity. Then market is overzealous, then it can take that on as well. So when around the around 1250 macro, market went higher, I was not interested to frame a sell setup. Instead of buy setup. Instead of that, I was looking for a sell setup. I have seen that this fair value gap has been traded over here one time. Then market came back again to this breaker block, to that specific breaker block, and then finally it has given me some kind of perfect market structure shift to that specific area. So this is your market structure shift. Let me mark it. That was the market structure shift. This was the fair value gap. Okay, over there. Now you have this entry fair value gap over here. This is your entry fair value gap. Let me mark it. This is your entry fair value gap, and that is your breakaway gap. Okay, so that is your breakaway gap. You should take your entry to that entry fair value gap over there. Let me mark that entry fair value gap. I have uploaded this entry to my Twitter, so if you are confused, you can take a look. Okay, and you should cover the breakaway gap constant and crossman because it's a bigger, huge breakaway gap. Where should your target? See this relatively equal lows from 1 minute chart. The 1 minute chart relatively equal lows. So I'm going to mark that low as my sell side liquidity. That is going to be your sell side liquidity. You should target that sell side liquidity from 1 minute chart. Okay. What you know, market is going to fall for this sell side liquidity. If you have framed your perfect setup from there, is that good setup? Absolutely. Market structure shift, immediate reaction to that entry fair value gap, and from this fair value gap. But actually I took my entry to that breakaway gap because I wanted to cover my stop loss above here. Okay, so above that high, I wanted to cover it around that area, so over there, and then this should be your target. You can see market has taken that sell side liquidity perfectly. Okay, but I trailed my stop loss too fast, so I got stopped out to the break even. For the first time, I got stopped out to the break even. When I got stopped out to the break even, this setup is still valid. Why? This is the origin of the high. Okay, so until this high is not taken, look over here, it failed to take that high. Until it's not taken, when market will close below this entry fair value gap one more time, you will take re-entry. So over here, when you will see that market has closed below this entry fair value gap, you will take re-entry. So over here, it has closed below this fair value gap. You should be in the market again over there, around that area. Your stop loss is going to cover this breakaway gap constant and crossment again one more time. That should be your target. Okay, and you can see how beautifully, how perfectly market fall and gave you a perfect 28 handle. I took my same entry when I saw this breakaway gap was broken over there. So I took my re-entry around that area after getting stopped out to the break even, and my stop loss just covered that high and I targeted over there. So that was my trade. What else can you do? You can look for the breaker block over here. High, low, higher high. The lowest down close body close candle is going to be your breaker block from 1 minute chart. So that is your breaker block, and let me mark it as breaker block. You see this candle has closed below this breaker block. The very next candle tapped over there. You are already in the market from there, and your stop loss is going to cover the breakaway gap and breaker block and the mohawk. Your target should be there. Okay, so in that type of situation, it's 1:2.61. I'm just showing you how many ways do you have to take entries. You have a lot of ways to take the entries, so don't get panic when you see this type of opposite run. After reaching until that area, market did a lot of consolidation, then it went higher again. Don't get panic by that big run or the higher run or the opposite run. Believe your liquidity. Here is your liquidity, so you should believe that market is going to take that liquidity. At least that liquidity should be taken. So you should not get panic when you see the opposite run. Look at this opposite run. You should not get panic to that opposite run. Okay, so I'm just explaining a lot of things, and here I'm not framing my trade from 1 minute chart. I'm also framing my trade from 15-minute fair value gap, breaker block. Okay, over here it has been traded around that area, the bearish fair value gap. I don't need to see that it is trading that bearish fair value gap one more time. Instead of that, I can just use any other platform or any other order block or maybe breaker block, anything from 15-minute chart. I outlined that setup perfectly in my Twitter, and I was talking to my Discord with some of my friends. I outlined that with them. Okay, I explained everything by my video which I have uploaded to my Twitter. Over there I explained everything around that area. So that was the setup. After this, what happened? Market went little lower. Look at the consequent and crossment rejection. Look at the rejection. Market rejected from there. I was waiting to see that if market can make another setup around that area. But all you can see, market didn't make any other setup around that area, and then suddenly around that time, 327. So around that time, market fall dramatically, took all the liquidity, tapped to this 15-minute last fair value gap, went higher again, when it went higher, I mean, it was outside of a session. That means after 345. So 345, we don't have any trade. So no trading opportunity around that area. If any of you get panicked by that run, you are actually not trading, you are doing some gamble. Please don't do that. Instead of that, please look for some kind of perfect setup. If you can look for some kind of perfect setup, you are good to stay in this market for longer time. Okay, so there was one setup, there was one setup, there was one setup. How many setup do you need? This is how I actually read the price, and this is how I get biased with my direction, and this is why I called myself the wizard. So guys, if you think that this video is little insightful and it helps you to understand the price action and how to avoid the opposite run, don't forget to give me the thumbs up, and please don't forget to subscribe to my channel if you are new, as I'm uploading videos regularly so that you can improve your reading price actions skill. Okay, so make sure that you have given me the thumbs up and subscribe to my channel. So until the next video, cheers.